Hi, it's David Pestana Broker and owner of Rise Realty. I want to tell you that some people make mistakes when trying to get a loan, and the number one mistake that they make is they wait until the last moment to qualify. So this is what happens. I ask them, can they get a loan? And they say, oh yes, we got great credit, we can definitely get a loan. And so they resist in talking to a lender, and then they go see a house. And then when they finally say, great, we're going to buy this house, and they go to qualify, they don't get qualified. There is something else outside of FICO score, and what most people term as I have good credit, meaning they have a good FICO. There are other things that lenders look at that are very important, just as important as the FICO score, in getting them qualified for a loan. In this episode, we want to review those things, and they're called the 4 C's of credit. What I'm going to refer to is Fannie Mae's guidelines for the 4 C's of credit, of obtaining a loan, okay? And the first C, which we already mentioned in the beginning, was your credit score. You got to have a good score. And they call this score a FICO score. Now, typically if you're like 700s and above, you're pretty good. If you're in the mid 600s, you can still get a loan. If you got under 620, generally you're out of luck and you got to go subprime or hard money lending. So the better FICO score you have, the more likely you're going to get a loan. Now there are 3 other C's to this, and the second one is capital. So it's something that a lot of people don't think about, which is capital is you got to have money in the bank or assets. So what happens is you may have the good credit score, but if you don't have money in the bank, what happens if something goes wrong in your life and you don't have the income to cover your debts? Well, you're going to default. So the banks like to see that you got money in the bank. Different loan programs may require different levels of capital or make basically reserves, as they call them, to cover it. So some programs may require 2 months reserves, some may require no reserves. And a reserve would be, 1 month reserve would be like if I lost my job and I didn't have any money coming in, I could cover myself for 1 month. That'd be 1 month's reserve. Third C of getting a loan is called capacity, which basically is referring to your job and your income. Okay, so do you have the capacity to buy a $2 million house? No. Okay, at what level of house do you have the capacity to pay for? You know, the average home around here is $300,000. So the average person would be able to afford or have the capacity to pay for a $300,000 home. So having good credit doesn't qualify for you for a $1 million home if you don't have the income to pay for it. All right, the 4th C of credit is collateral. And what this means is that when you borrow money, when you get a loan, the bank has to put it against something, and that's going to be against the house. And the house acts as collateral. So we all know that if you don't pay your mortgage, they're going to foreclose on your house, and they're going to force you to sell it. And hopefully the sale of that house for the bank is going to cover the loan that they gave you, that you defaulted on. Well, we don't want that to happen, but that's why the banks do appraisals to make sure that the collateral against their loan is sufficient to cover it if anything goes wrong. So in summary, there are more things in credit score and FICO that you need to get a loan. And we recommend that you talk to a lender to figure all this out. So you want to make sure that you have a comfortable payment, that you have the capacity to pay, you have enough money in the bank to cover the capital requirements, and you won't know this until it's actually done, but the appraisal will get done and everything looks good. And your realtor can help you out figuring out and make sure that the value that you offer on the house is going to be supported by an appraisal. So you figure all those things out, you're good. You can go into a house with much more confidence because you not only know that you can get a loan, you know exactly which loan you're getting, what's the down payment, and all those things. Thanks for watching. This is David Pestana Broker with Rise Realty. We're here to help you.